And now let's talk about the cost at the pumps. Gas prices also rose last month after being on the decline lately. This time last year, gas in southern Ontario was going for about $2.10 a litre. And while we're still significantly below that ridiculous price, experts say buckle up because we could be looking at $1.90 a litre by this fall. How much does it cost you to fill up these days? Well, over the last month, Statistics Canada reports that the price of gas has gone up 6.3% compared with March. That's the largest monthly increase since October of last year, and it's contributing the most to the acceleration in the headline Consumer Price Index. Right now in southern Ontario, gas is hovering around $1.50 a litre. When just a few weeks ago, on a good day, you could probably fill up for just under $1.30 a litre. According to Statistics Canada, this increase that we're seeing followed an announcement from OPEC Plus to reduce oil output, pushing prices higher. The switch to summer blend and an increase in carbon levies also contributing to higher prices. And while paying $1.50 a litre is more expensive as of late, gas prices were actually 7.7% lower in April 2023 compared with April 2022, when prices were higher due in part to Russia's invasion of Ukraine. Last year around this time, the price of gas in southern Ontario was around $2.10 per litre, and people at the time were furious.
It's crazy. It's at this time with everything everyone has to deal with, I think the government should be doing more to help us.
We can get back down to a reasonable price, so I can survive a little easier, but there's no raised prices for it to compensate for the gas that raises. So yeah, it just hurts even more when the prices are up like this.
And while there has been a significant drop in prices since then, it still costs someone with a small car $60 to fill up in our area. The most expensive gas in the country right now is in Vancouver, where the price for regular is sitting around $1.84. The cheapest in Edmonton, where people there can fill up for $1.33. As the busy road trip months of summer approach, experts predict that gas will get even more expensive, an extra burden Canadians must endure on top of unaffordable food prices, rising rent costs, and higher mortgage rates. Joining us now to discuss gas prices in Ontario is the president of Canadians for Affordable Energy, Dan McTeague, who also tracks and predicts gas prices on gaswizard.ca. Dan, Stats Canada says gas prices rose over 6% in April, the biggest single-month jump we have seen since October. Why is that?
Well, it has a lot to do with the fact that there was an increase from March until April for gas prices. We saw that with respects to, most importantly, the carbon tax. About a 9-cent increase, 10-cent net month over month. 4 of that was the carbon tax. About a penny and a half to 2 cents was because of a weaker Canadian dollar. We price all of our energy in U.S. terms, so that was one of the other factors. Almost 2/3 of what we saw here was due to government policies directly impacting prices. Of course, it also helped that February and March saw some pretty low numbers, pessimism in the markets, and of course, OPEC had not made a decision to cut back its oil production at that point, so that too had an impact. But it speaks to the much larger issue of inflation leading to higher interest rates, which in turn are leading to much more pressure on both mortgages and on rentals, apparently.
Over the last year in Ontario, we have seen the cost of gas rise to record-breaking prices. Everyone remembers when we were seeing over $2 a litre in our area. Are we going to get those prices again this year?
That is the multi-billion-dollar question. Kelly, I don't see that happening just yet, but the second half of 2023 is going to reveal a pretty significant rise in demand and a significant drop in supply. It's there. Everyone knows it's there, but we've been tiptoeing around that for some time. I don't know how long this, the energy markets can continue to, as it were, tap dance around fundamentals, but they've been doing a good job at it for the past several months. The overall fear of recession, of the Fed raising interest rates, of U.S. hitting the debt ceiling a few months ago, China not coming out of the COVID lockdowns, take any level of excuse that you want. they've all been trotted out, and each one of them has so far disproven the trajectory on which we are seeing demand being very healthy globally and supply not quite meeting it adequately. In fact, the International Energy Agency, not a big fan of hydrocarbons, has had to admit that the demand is in fact higher than their expectations. And this is the second or third time this year that they've had to ratchet upwards their projection on demand. I think by the hot dog days of summer, we're also likely to see prices rise, not to $2.15.9 a liter, which we saw back on June the 8th, but $1.90 is certainly not out of the books in terms of more prolonged higher prices that'll go well beyond September.
What can Canadians expect in the months ahead?
I think we'll continue to see inflation rise. I think the central bank, the Bank of Canada, will probably raise interest rates another quarter point. I still think there's a bit of a frenzy on the real estate side. It's certainly there. But as far as fuel is concerned, an average increase of about 20 cents a liter at some point this summer. Second half starts on June 1st. That's only 2 or 3 or 4 or 5 weeks away. We don't know how soon that's going to happen, but it's pretty critical that the market has done, as I said before, completely ignored fundamentals. You can have a bit of that, but when you completely abandon that rubric that's important for what we call price discovery, well, you wind up with $2.15 a liter, as we did 2 years ago, as we did this time last year. I suspect that what we're seeing now is all this lower than we expected prices, and the prices are now about 55 cents a liter cheaper than they were this time last year. That's good news, but it won't be enough to stave off the reality that these prices are ridiculously low, despite increases in carbon taxes and a weaker Canadian dollar. There has to be a correction, and that correction will be the upside, and it will be painful, and it is going to hurt Canadians.
Thanks so much for joining us, Dan.
My pleasure. Thanks for having me, Kelly.